Hey, everybody. If you are like me, you're a long term investor, and I buy most of the stocks in my portfolio with the intention of holding them for a long, long time. The term forever stocks gets thrown around. And to be honest, I don't end up holding all my stocks forever. Um, Tyler and I both sell stocks at various times for various reasons, even though we maybe approach them as, forever investments. But that's my goal. I want to find stocks that I own when I'm, 80 years old. So we're going to talk about a few of our favorite forever stocks to buy right now. Before we do, please take a minute and check the link you see on your screen. It's a message from our sponsor, The Motley Fool. You can get the top 10 stocks to buy right now. It's a great way to support this work that we are doing on YouTube. So I'll kick it off. I am watching Disney very closely right now. It's one of my biggest stock investments and one that I think is heading in the right direction a lot more than investors seem to give it credit for. There's a lot of distraction going on with Disney, right? There's been the CEO changes. Bob Iger came back. He's now renewed, I think, through 2026. There's a big activist battle. Nelson Peltz is challenging for board seats, and it's distraction. That's what it is. So when you actually look at the numbers, things are heading in the right direction. When Bob Iger took over again, one of the focuses was to make streaming profitable. The Disney Plus, the streaming division, was kind of growth at all costs when he took over. Now, in the last quarter, they reported streaming revenue was up 15%. Big improvement in the operating loss. They reduced spending on content, and it's just making good progress. In the parks division, which is kind of the cash machine of Disney, they're investing heavily, which was long overdue in my opinion. My family and I are frequent Disney World visitors. We live about a 6 hour drive away from the parks and go there often. They're raising ticket revenue or raising ticket prices next year for the first time in several years. They're investing $60 billion in the parks and experiences division over the next 10 years. So that's $6 billion a year. To put that in perspective, throughout the entire company, Disney spent 5 billion dollars on capex in 2023. So they're spending more than that per year on just the parks and experiences part of the business going forward for the next decade. There's a lot more competition. Universal's putting out a new theme park that's opening shortly, and Disney, I think, is kind of falling behind the curve with that, so they should catch up. The cruise line is an underappreciated cash machine for Disney. The cruise industry itself is just firing on all cylinders right now, and Disney is taking delivery of 3 new cruise ships between 2025 and 2026, which will double their fleet. And if you're not familiar, if you're not a cruiser, you might not realize this. Disney has incredible pricing power on its ships. For the price of one Disney cruise, I priced this out. I could take my family on 3 Carnival or Royal Caribbean cruises of similar length and destinations. Um, so that's tremendous pricing power, and people are paying it. They're sailing full. So that's a great business to be in. I like some of the other moves they're making. I love their partnership and investment in Epic Games. I think that creates a lot of interesting possibilities. I'm curious to see what this joint streaming venture between them, Warner Brothers Discovery, and Fox is going to look like. Um, Looking forward, they expect about 20% earnings growth this year. So, and that's a product of not only just revenue growth, but also of those efficiency improvements that Bob Iger is making there. Um, they're doing a great job with cost saving. They actually recently said that they're on target to save $7.5 billion a year. Their initial target was 5.5. So Disney reinstated a dividend. It's still not a big dividend stock, but it's one that I think has a very bright future. And my bold prediction is within 10 years, Disney is $1 trillion company.
So I do want to ask one question because this is the one thing, because on the theme of it being a forever stock, Disney struggled. I think that's a very fair assessment without Bob Iger. When he left and his hand-picked successor didn't quite live up to it. And we can say, oh, it was COVID and things like that, but it does look like there were some material issues beyond the fact that it was, just a bad time to be Disney. With that in mind, Bob Iger isn't going to live forever. And like you said, it is 2026 until he steps down. But Is there any concern that we could just have a repeat performance where the next handpicked successor struggles in the same vein, and we almost becomes like that Starbucks Howard Schultz thing where he comes in 3 or 4 times and rights the ship and then rides off, and we kind of keep doing this for another 10, 15 years?
Yeah, that is my number one concern with the company, from a forever stock perspective. The business I'm not that worried about. I can't picture any future in say 15, 20 years where people aren't going to Disney theme parks or aren't watching Disney movies still or any, the business is a forever business, but that doesn't necessarily mean a forever investment. So my hope is that because Bob Iger is probably going to handpick the next one, is that he learns from Bob Chapek's mistakes. Don't approach things like streaming with profitability at all costs or with growth at all costs at the expense of profitability. Um, don't try to overcomplicate the parks division in efforts to bring in more per guest spending, which just ended up alienating a lot of guests. So like I said, my short answer is I hope that they learn from their mistakes there.
All right. And it's funny you talk about the experience, right? Like people are going to keep going to Disney because it's Disney. And that kind of is the theme I worked on a little bit too, is like a forever concept is things in our human behavior that aren't going to change. And one of those things I think is travel and experiences. And like, as much as we talk about, oh, well, you can just do it in the metaverse, I got to say, sitting on a beach is way different than putting on some headset and saying, oh, I'm at the beach. It's just not the same, right? And so one of the things I've been think I have considered a kind of forever stock for a while here are airport companies, specifically Mexican airport companies, because they are publicly traded versus, run by municipalities typically in the United States. And the one I'm looking at is it's called Southeast Airport Group, or Grupo Aeroportuario del Sureste. This is the operator, I guess you will, or kind of have an operating license to run several airports in Southeast Mexico, as well as operating license for several in Colombia. And also, they just started an operating concession in Puerto Rico as well. Now, to understand what this business actually is, it kind of think of it as almost like a combination of a utility and a real estate investment company. On the utility side is the actual landing and takeoff of airplanes, where every single time that an airplane lands or takes off or docks, either with those little like stairwells that are out on the tarmac, or the actual like tunnels that you get to walk through, those all have prices, and every single airplane has to pay some sort of fee to do services at the airport. International rates for those, like an international flight, typically pays a lot more than a domestic flight for these particular services. And that's kind of the utility side of it, where it's like, as the Mexican government actually sets the rates for those fees, and the airport operators get to increase those fees if they invest in the airport. So if they want to add an extra runway, or they want to add 3 or 4 more jetways to make it a little bit more of a convenient airport to use, those sort of things are going to get a set rate of return, and it gets compensated in those fees. And then at the same time, the operating license is allowed to rent out any development of the airport itself, in terms of your food court. You rent out space in your food court, you rent out space in retail, if you want to build a airport hotel on the airport itself. And basically you get to act as a real estate investment trust, where you get to collect the lease money on these things. And typically what the agreement is in these operating concessions is that, should the Mexican government want to take these back, the Mexican government has to pay market rate for the any improvements that are made on these airports by these operating companies. So it's an extremely stable business, right? I mean, yes, tourism can go up and down, so your airplane fees can go up and down a little bit, but at the same time, it's one of those things like, do you ever really expect travel to stop happening? I really doubt that. People want to get out and experience things. And certainly with the Southeast Airport Group, they have the the Cancun airport, which just happens to be, I think, the second most visited international airport in Mexico, behind Mexico City itself. And so there's a lot of international travel going to there, and it's a unique business model that has been attracting a lot of the Latin American countries and Caribbean countries to employ these models because it's been relatively successful for them. Like I said, they got an operating concession in Puerto Rico, in Colombia. I would not be shocked to see if we were to see other countries take on this sort of model, and the Mexican airport groups. Southeast is one, Pacifico is the other one that's a large player in this business. It's a model that's replicable across much of Latin, Central and Latin America. Excuse me. It's a unique asset. It's a variable dividend, so they don't pay out a consistent dividend like you'd expect from an American company. They pay out leftover cash flow at the end of the year, and so if you're expecting like steady dividend income, that's not going to be really a thing here. But it's overall, it's been a very steady business, and one that's likely going to be around for a very, very long time. And overall, it's been it's been a long-term winner, and it's hard to see that not being replicated over the very long term.
So, just a quick follow-up question: what do you think are the biggest risk factors of all these Mexican airports? Because it sounds great. Would it be like foreign exchange risk? Is it political risk? Is it because when you're investing in non-U.S. stocks, it brings like a whole new set of risk factors naturally.
Yeah.
So, what would you think?
Well, they have listing in the United States, so they do have to disclose to the SEC and do have to follow all of the rules of being a publicly traded company in the United States. So you do have that benefit on that end. I would say the greatest risk actually is a slight political risk in that, like I said, the Mexican government sets the rates at which it's compensated for its development. And recently, I think it was last year, the current president, it goes by AMLO, Obrador, he kind of said something along the lines of, look how much these Mexican airport companies are making. And it was kind of like a dig at them of them being immensely profitable businesses. And kind of, it was a little bit of a scare that maybe the Mexican government might reset some of these tariff rates for landing, jet port use, things like that. And so obviously there's a little bit of political risk there relative to maybe what you would get for a United States company, because airports tend to be a relatively strategic asset compared to some other things like that. And there's also some contingencies where it's like the Mexican military can take them over in a pinch, but those are relatively low. It's not something I'm necessarily afraid of. I own this particular company, Southeast Airport Group, in my own portfolio, and it's something that it doesn't keep me up at night. But every once in a while, when I do look at it, I go, yeah, that's the one thing.
Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.